There's this guy, Kyle C. Williams, that started to pop up on the leaderboards, and his equity curve was just like really slow and very straight, like up and to the right, like exactly how you would want an equity curve. And it looked boring. I was just like, who is this guy? What does he think he's doing?
He's too consistent.
He's too consistent. And I never thought. I honestly, when I first saw that, I was like, this guy is just here now and he's gone later. And then you fast forward 9 years, he's one of my best friends, I could say, at this moment. I would say one of the benefits of being transparent is game recognizes game. First of all, most traders who are successful are generally willing to offer help.
Yeah.
I find that the whole community, doesn't matter what level of trader you are, like they like to talk about trades. They remember what it's like through the bad part of it all, and they don't want to see anyone suffer. They don't want to see anyone lose all their money. They want to offer as much guidance as they possibly can, given circumstances, right?
I'm in an extreme where I am probably the most discretionarily systematic you can get.
What does that mean?
So if being systematic means you have to fit within this box and you can't go out of this box, like you have to take entry here, you have to risk here, you have to follow the system, I am always bouncing around in that box.
You'll stretch the box a little bit.
Yeah, exactly. Yeah.
Stretches the box, and it annoys me. Because sometimes he'll be like, we'll both be in, we'll have a risk level, and then he'll add. And I'll be like, what are you going to risk with that? And he goes, it shouldn't go back to this level at this point. And I could never make that judgment call. I was like, how do you know that? And it's going to be choppy.
As much as systematic as I would like to be, the discretion keeps me human. And so there's totally mistakes that go on for sure.
Let's say you trade the same ticker and then one makes more money than the other. Would it upset you? Well, do you ever, I guess the bigger question is, do you ever get trapped in a comparison game?
Being competitive does drive you, and there was a moment where it definitely drove me, but that can also be a toxic relationship with the market. So, the most important thing is probably competition with yourself. What are your PRs? What are your best days? Let's not worry about what they're doing. Let's worry about what we're doing and how we can improve those numbers.
If you are making so much money from trading, then why do you charge for such a service or education?
It's funny, and I actually learned this as I became a teacher. And it sucks to say this, people don't value things when it's free.
Here on the Humble Traders podcast, it is my immense privilege to talk to extremely successful millionaire traders, to share with you guys their struggles and the pain of losing money during their early career stages, as well as their current strategies and tactics that they're using to profit from the market today. And you're in for a treat today. I didn't just get one millionaire trader here, but two young successful traders, Kyle Williams and Mike Huddie. They were previously guests on the podcast, and they were the fan favorites. I had the pleasure of connecting with both Mike and Kyle here today in Los Angeles. In this episode of the Humble Traders podcast, you're going to learn these traders' current strategies that they're using to profit 6 to 7 figures a year. How these two millionaire traders surround themselves with like-minded traders who are on a similar journey through networking. The discussion of systematic trading versus discretionary trading, the pros and cons of each of the trading styles. Why trading is an art and not science. How these two traders can have the exact same thesis and reach similar results through very different executions and trading styles. The Humble Traders podcast is a joint labor of love. We aim to provide you with the most authentic trader experience and interview with pro tips that you can actually implement to better your trading. Please remember to hit the like button down below and join us today for a very intriguing conversation with Kyle Williams and Mike Huddie. So here on the Humble Traders podcast, I've had the pleasure of interviewing a lot of millionaire traders. But today we have two right here in the room with us. Welcome back to the show, Kyle and Huddie.
Yes, thank you.
Thanks for having us on the show.
Yeah, it's just so worked out that you are kind of both in LA at the same time in the region. And I'm glad we can kind of get this group conversation going.
Yeah, we are both, Southern California born and raised people.
Yeah.
So yeah, we're right in right in the area.
Yeah,
So.
and we're lucky to catch you before you leave for Asia too.
Yeah.
Yeah,
It's
because
very
you
slim.
travel a lot.
Very slim windows that I'm around here, but it's a good time.
So just so to give our viewers a refresher of who you are and what kind of trader you are, if you could tell our audience, we can start with you, Kyle. What kind of strategies are you working on this year and what's been working for you?
Yeah, so for those who don't know of me or getting a refresh, I am predominantly a short bias trader. So I will and do make money long, but it's probably, 10% of my profits, where I'm most comfortable and find the biggest edge for me is on the short side. But it's typically like momentum, like mean reversion. So if something's going to go up a ton and it's kind of, having a blow off move from, let's just say something goes from $100 to 10, right? Like I'm just naturally going to be drawn to that and saying like there technically could be a pullback. No necessarily any fundamental thesis, but just from a technical price action point of view. Honestly, that right there has been what's worked for me probably my whole career. Sometimes better and other times than not. But this year on certain tickers that have really had really, really huge runs, have offered some downside moves that are like my bread and butter. And that consistently has been the biggest portion of my career's profits. So,
as you can see from the interview, both Huddie and Kyle are momentum traders. Whether trading manually or using algorithmic systems, the key to any kind of momentum trading tends to be volatility. To have potential success, the assets you're trading must make significant price moves. Especially in recent days, we see so many global headlines creating turbulence in the market every other week. This is where Beta Pro ETFs may come into play. Beta Pro by Global X are Canada's leading leverage, inverse, and inverse leverage ETFs. They're managed by a Canadian-based investment fund manager, Global X, with over $40 billion in AUM. These ETFs provide traders with an investment vehicle to potentially capitalize on high volatility or hedge their existing portfolios without using a margin account. Beta Pro ETFs can provide traders with up to 2x and negative 2x leveraged daily exposure to big stock indices like the Nasdaq 100, the S&P 500, and popular commodities like gold and oil. For example, during a day where many semiconductor stocks fell to the DeepSeek headlines, traders could have looked at QQD. QQD is a Beta Pro Nasdaq 100 negative 2x daily bear ETF that moves inversely to the Nasdaq 100. This means that if the Nasdaq dropped by negative 3%, QQD could rise by 6%. With QQD's double inverse leverage strategy, savvy traders may use it as a way to hedge their portfolio and potentially profit from short-term market downturn. As an alternative to a margin account, which comes with other risks. A note of caution, leverage ETFs can amplify index returns, enhancing daily gains, but also magnifying daily losses in downturns. Inverse ETFs profit from market declines, but can incur rapid daily losses if trends reverse. Investors should assess their own risk capacity and conduct thorough research before investing. Beta Pro offers a wide range of leveraged bull and bear ETFs, making it Canada's largest and longest-running suite of leverage ETFs. They recently updated several of their Beta Pro ETF tickers, so make sure to check out the full list of tickers as well as the indices, commodities, and sectors they cover in the link down below. Now back to the video.
This year on certain tickers that have really had really, really huge runs, have offered some downside moves that are like my bread and butter. And that consistently has been the biggest portion of my career's profits. So
Okay, so a lot of mean reversion day trades.
Yes. Yeah,
Okay.
Yeah.
What about you, Huddie?
For me, I've been trading for 9 years. I've had a number of different strategies that I've employed. Right now, the strategy that I focus on the most are, small cap stocks that are gapping up quite large in the pre-market. Those are generally my focus at market open. A lot of what I've done throughout my career is being a big picture type thinker, more of like a fundamentalist. I kind of want to know how the company is structured. I want to know why it's running. I want to know if there's some kind of event, a sell the news event, or some kind of objective here for the company to accomplish. And those are generally some of my favorite trades to be a part of.
And you've been trading for 9 years, and for you?
I think, June 2025 will be exactly 9. So call it 8.5.
Oh, wow. So
yeah.
pretty close.
Yeah.
And into which year of your trading career did you guys meet? Do you remember?
I don't remember when we first acknowledged each other's existence online.
Okay.
I remember when I acknowledged Kyle's existence.
Really? Okay.
I remember like it was yes. So we were all in the Tim Sykes like room, and there was like a leaderboards of some sort. You'd upload your trades, and we could see your profits.
Okay.
And I remember that like it was like me, Jack Kellogg, and Dom had all hit like 100 or 200,000 in profits. So like we knew who each other were at that moment, reaching out to each other and kind of seeing what kind of traders we all were. And then into year 2 of knowing those guys, there's this guy, Kyle C. Williams, that started to pop up on the leaderboards, and his equity curve was just like really slow and very straight, like up and to the right, like exactly how you would want an equity curve. And it looked boring. I was just like, who is this guy? What does he think he's doing?
He's too consistent.
He's too consistent. And I never thought. I honestly, when I first saw that, I was like, this guy is just here now and he's gone later. And then you fast forward 9 years, he's one of my best friends, I could say, at this moment.
That's funny.
But I remember the day that I was just like, I think you were at like 50K in profits. And I was like, this guy's climbing.
Oh.
That is interesting.
I had a pretty slow and steady start. I started under the PDT, and so the first year and a half probably of profitability was just me getting to $25,000 in my account. So I definitely had a slower kind of crawl for sure.
And then an exponential increase from there.
That's pretty crazy. I remember during our conversation last year, you said you never blew up in accounts, right? Like you drained it to, I think the remainder 1,000 or 2,000, but you never blew up.
Yeah. And I guess it depends on. I've always heard people like we'll call a blow up. It's like if they lost most of their accounts. So it's like I lost 70-something%. I had like $1,700 left of the first $6,000.
Yeah.
But I never blew up in the sense of like. I went all in, and the next thing I know, I have no more money to even trade with. But I did bleed it down to its last, call it $2,000. Yeah.
Did you ever blow up?
I've never blown up an account.
Really?
Nope.
So I'm the only one here. I think I blew up like 2-3 accounts of like $2,000.
I think it's a badge of honor to wear.
To never blow up, yeah.
Well, and to blow up, I feel like it works both ways.
Yeah, I
like
guess so.
Writing a passage. Almost.
Yeah. We were talking about this earlier. A lot of the Tim Sykes students eventually become millionaire traders themselves. They're all around the same age. They're all kind of like you, just like you guys.
Yeah.
Yeah. I think it's a stage in life, right?
Yeah.
It's and I always say this. It's much easier for the college student who has no responsibilities but himself versus the 40-year-old with 3 kids and a full-time job. It just doesn't. From energy to be able to spend on trading, from time you have, from then responsibilities that don't require financial burden on you trying to grow an account. Like there's just so many outside factors. Then you have to be good at trading. Like before you even get to the trading, there's all these external factors that can kind of really set somebody up or not. And it doesn't mean the 40-year-old can't be successful. It's just like there's clearly some extra hurdles to even get to the finish line than say a 20-year-old. So.
And I would say that's probably. It might change as we go forward. One of the reasons that I think a lot of the success comes from the younger 20 age is just because of the new, I would call it almost like an innovation that trading can be done at your desk, at your computer, and there's all this software that you have to figure out, and you have to really know how to work the internet. And for us, as like 90s babies, that's all second nature to us. And as we're coming into this new world where everything is virtual, like that wasn't the thing in 2000s. That wasn't the thing in the 1990s when you had to call your broker and input your orders or whatever it was. So we're kind of, I wouldn't say we're first to the scene, but we kind of were able to find it, I think, more easily, more gravitate towards it easily. And then you probably just have a bigger pool of people that are able to do it from the 90s.
Yeah.
Certainly the first generation did like have it as easy as on an app.
Right.
On your phone, just bam, buy, sell, and we never, most of our trading is certainly on our laptops, but yeah, as popular as it is, it wasn't a thing, just pull up a phone in 2010 and start trading than it is today, So.
Yeah, I'm sure we're about to see a lot more Gen Z millionaire traders too, and who are just trading from the phone, never needing to open a laptop.
Right.
They're out there.
Yeah. So obviously you guys are friends.
I barely know him, yeah.
But he's your friend though.
What's your name, Jim?
Yeah. Bob? No.
But you guys also trade, some similar stocks, but you don't trade exactly the same. How would you say you guys are different in terms of trading, your approach to trading?
It's really interesting. I think that we trade predominantly, we want to trade the exact same things. We were grown from the same fundamental framework of what to expect with mean reversions and stuff like that. But the difference is, I think, in the art of it. I think that Kyle finds better ways to size in and trust the risk level and trust his plan. And I think that's it's a great attribute to have as a trader. Whereas I'm more on I don't want to size in as big. I don't really want to manipulate the stock the way that he does in terms of the risk reward. I just want to find a way to win. And so it's hard to kind of quantify that difference, but it ends up with Kyle having more size and less risk on the same setup. And I usually have less size and kind of like more risk. It's because he positions himself a bit better.
Well, I would say in some scenarios, I position myself maybe with more risk, but not like sometimes you're very patient on getting your entries, where your risk reward is way better than mine because I've just maybe been a little too excited too early.
Okay.
Where my risk reward is worse, but my risk is still bigger because I've just taken more size. But I think that comes from your selectivity. Like you're much more selective on at least the entry and when you want to enter. But yeah, vice versa, I am maybe less sloppy or more sloppy with entering. And so it does result to me, maybe taking some trades that he would miss because he's waiting for that exact perfect kind of look. And I'm kind of like, I'll enter now and be okay if it doesn't look great. Is it great for me later, in a day or two or 5 minutes from now,
So just to clarify, are you saying you are more patient with waiting for the entry since you are both short sellers, you are more patient with your entry, trying to time the top or the breakdown point. And you are more so like you'll do like a couple of testers and see what, and like stop out and then re-enter. Is that what you mean?
Yeah, I'm more willing to do that. I think we're both pretty good on waiting for the backside to come in and be there. Like I'm typically not someone who's going to test too much size on the front when I think it's not right. It's just that when maybe the yellow light is going from yellow to green, I'm immediately, from a stop street light example, like I'm willing to immediately start entering, whereas he might be like, hey, it could have looked a little bit better in like 5 minutes. I'm going to wait and see. Would you agree there?
Yeah, I almost feel like I'm more reactive, and Kyle's more, I wouldn't say assumptive, but takes the initiative to say, okay, it's here, it's now. Like, I haven't seen all the signs yet, but it's good enough, and I think the move is coming. Whereas I'll sometimes like miss the first move and then let the stock counter, and then I'll get in on some kind of bounce or pullback type of, depending on which bias I have. And so I'm a little bit more patient, and sometimes I miss trades because of it.
So if we take a ticker that you both traded, the charts, and we overlap it, what would we see in terms of arrows?
So
That's
I think
interesting thought, eh?
I think Kyle's arrows would be first.
Okay.
And there'd be and like Kyle might have like at the start of the move there might be an arrow and then a cover and then a reshort, and I'll be there at the reshort.
Oh,
so
I see.
Some of our arrows will align, and if we stop out, I think those will be probably very identical to where we stop out.
Yeah.
I think we're both sizing into the same area on these types of setups. But again, I think Kyle's more quick to the punch, and I'm more like, prove it to me, prove how weak you are, and then I'll get in if you have some kind of like pop back into a good area.
Yeah. That's interesting because two traders can have the exact same overall thesis. And due to your temperament or, maybe you have different risk tolerance, you execute it and time it very differently. And they work for each of you individually. Yeah, but do you think you'll be able to trade like Kyle? And Kyle, would you be able to do what he does, like execution-wise?
I think we're pretty interchangeable. There's strengths like as selective as he is, I don't think I can wait. I get too much FOMO, right? So like when you talk about how you were saying that, I'll enter first. Maybe there's some kind of pull or cover or trade I take, but then there's a reshort opportunity. That's when he takes it. I know for me, my personality has fit or grown to taking that first, maybe a little bit early, but not late enough to miss the move kind of idea, because I get FOMO very easily. Yeah. So if I'm the kind of trader who saw that move happen, I would still be patient for the bounce like Huddie would, but I would be coming into that trade with FOMO, having missed that first possible opportunity for sure. So I think that's a bigger weakness of mine.
I definitely think that we could emulate each other's trading styles. The one thing that I think escapes me sometimes when I watch Kyle trade is that he is more willing to, I wouldn't say be in at all costs, but like for me, I'm kind of a perfectionist on where the stock has to be for me to take an entry. And I feel like for Kyle, as long as it's kind of giving the right structure and shape to the price action, he's willing to come in as it's maybe misses the perfect entry, but will chase maybe like a breakdown, or as it starts to kind of fall off a cliff, he'll get in there, and like I'll generally miss that 100% of the time.
I actually remember it wasn't a short trade, it was a breakout trade. I forget the ticker, but it was, Huddie brought it to my attention. He said, hey, this breakout looks really good. But he's like, well, I don't want to buy it here. And I immediately saw it. I was like, I'll buy it right now. And I remember buying it, and and just lucky to me, it never went lower than my entry.
I see.
And so the Huddie's sitting there like, damn it, Kyle, like,
take some commissions.
So
okay, so you do still go long once in a while.
Yeah. I'm not that great at it in terms of small cap, but when I do have a long thesis, I'd like to think it's more of a higher quality, where I like to, because I get uncomfortable, at least with small cap. So if I'm taking it long, it's like there has to be some level of comfortability or conviction in it. Otherwise, if it's some kind of, oh, this kind of looks good, let's see how it goes, like I'm just going to not follow my plan or to exit it because of boredom or of fear. Like I have to make sure it's pulling me in of like, hey, there's a reason why I want to be long this thing. And if it's not that, I typically lose or just give away profits at that point. So,
who has higher risk tolerance when it comes to trading?
I think it's a no-brainer. It's Kyle.
It's Kyle?
Yeah.
Oh, okay.
Yeah. Which to what we were talking about earlier about the slow grind up, I would argue my risk tolerance is higher only because I've tried to keep it as proportional to my account size as best. So like when I had a small account, it was proportional to that 6K account. But now with a $600,000 account, I'm trying to take that same level of proportions, but with 100x more money. And I think I've done a fairly decent job at keeping those ratios high, so that like let's say in 10 years I have a $6 million account. Like I probably will, just by process of habitual habit and having a process, I'll probably be that much bigger if I have that kind of an account. Yeah.
So in that sense, you two kind of have a same or similar system of calculating how much size to use then. It's just a percentage of your total account size. Is that correct?
But I would say that that's more newer to my trading than old. I would say that I had the exact opposite come up than Kyle. Mine was not meticulous. Mine was testosterone filled. It was. It was.
What does that mean exactly?
It was.
It was aggressive starting.
I was
out.
very aggressive. I was willing to go all in a lot of different circumstances. If I thought the setup was the Super Bowl of setups, I'd click the button for the whole account. And obviously, I wouldn't be risking 100%. I'd have some type of level that I would play off of with that whole account in. But I was more willing to just. It wasn't proportional. It was however much money I had, I was going to get it in there and see if we can compound this account in any way possible. And then that, as the account got too big, that was a problem because then the losses got too big, and then I would have existential crises at the end of the day with how much money I lost. So I had to kind of over my whole career, I've had to reprogram and really understand what position sizing really is and how to make that work with your trading account.
Or do you use the same approach then? Then
yes,
total percentage of your equity and then
yes, but also 2 points. So totally. I wanted to what I call the 1% rule. So like when I had a $6,000 account starting, I only wanted to lose no more than $60. I will admit, similar to Huddie, at some point when my account started growing faster, it was like, okay, I can't. 1% 1 month would be double the risk next month. Like if I took an account from 50K to 100K, like, wow, I'm not comfortable risking $500 or $1,000 tomorrow. So at some point it just became to a dollar amount that I like, but that dollar amount stayed relatively close enough to the 1%, I would say. Not exactly, but I would make sure I was increasing it as my account was getting bigger, but increasing it on my own terms that I was staying comfortable with it. And where Huddie says, he went all into then much smaller, I feel like mine has, we've almost like, again, similar strategies, same styles, but our risk appetite has almost crossed, where if he was super on this side aggressive and I was very slow and steady, we've kind of crossed where now he's very conservative and I've actually kind of maybe ramped up the risk seeking a little bit more. Yeah.
Oh, interesting. Yeah. And also I remember in our conversation last year, you mentioned, there are certain setups that you will use a bit more risk. Let's say usually it's 1%. Certain setup you would do 3, 4, 5, 10x.
Yeah, that's a great point.
Is that still true?
Yeah, and so that was, the 1% rule was one for me to just stay and, to Huddie's point, be as consistent as possible, where it's like it didn't matter what setup was in front of me. I just wanted to, pretty much risk the same amount. After, I don't know, 3 to 4 years in, I had enough under my belt to say, hey, and I've seen enough to be like, this one setup over this breakout is clearly not as good as this breakout last week. Like this breakout today has so much more going for it that it makes sense for me to risk more because the odds of it working are much higher than the setup last week. And so now I'm at what people would call, I guess, an exponential bet sizing. So like depending on if I have 10 different indicators and a setup tomorrow has all 10 of them, I need to be risking, call it 3, 4, 5% of my account versus the setup that has maybe half the indicators. And it's like, okay, that still should just stay at 1%, in terms of that ratio. So,
do you use the same approach as well for your different setups?
I think that is the right approach to reach like the upper limits or ceilings of capital appreciation.
I see.
But that's not really my intention. My intention is more income based than capital appreciation, and there's a difference there, at least in my head. And I think this is the right way to trade. I do not do that. I have trouble getting over the 1, 2, 3, 4, 5K risk tolerances. I don't know why. I've just never been able to really push myself into, consistently risking 10K on every trade, even if the accounts have gotten to a point where I can. It just always I didn't feel good if I had took 2 or 3 or 4 attempts on the same stock to nail it. And, I'm down 40K before I'm even in the position. Yeah. I won't trade right. So for me, it's like for most of my career, I've taken 1 to 2K losses when I'm wrong. And that's been fine for me.
Yeah. But at a high level, you're probably a lot less stressed out than Kyle.
Yeah, absolutely. If I take a loss, it's no sweat off my back. If I mess up a setup, it's, I care more about mistakes than losses. So that'll stress me out if I make a mistake with my sizing or whatever it is.
And if in Huddie's case, or in many profitable traders' case, once you get to that 1 or 2K risk level, you can make a lot of money. You don't. I think, and I've fallen victim to this where it's like, oh, you want to make the millions. Well, I guess I better risk, 50K tomorrow. When that's just not true. Like if your setup and system and strategy works, and you're making 2 to 1, 3 to 1, 5 to 1, sometimes even 10 to 1 on the best winners. If you're risking 2K, you're making 20 grand. You do that once a month. Yeah. And in small cap, there's plenty of opportunity like that where it's like, you're making $250,000 a year. And that's just on, say, hypothetically, a small handful of really good trades. Now, granted, there's losses involved. There's it's not a perfect science like that. But you do the math of taking only $1,000 risk and having a positive risk reward, and it adds up. So I totally, I see why a lot of traders can get to that level and just be like, yeah, this is great. Look at the risk reward of stress wise after that, like to Huddie's point, I can put myself in some high blood pressure situations. So
I do think you have a little bit more wrinkles than Huddie too. But do you think you'll ever eventually decide to kind of be a little bit more conservative and not risk as much?
Yes and no. And there's a few places my brain goes when I think about that. If I have a proportional amount of money outside of the markets. So let's say in 10 years, I've got 5 million over here, 5 million in this house or this investment property, and then another 5 million in this investment portfolio, to where it's like so much money is outside of my trading accounts that I can afford to be risky with the money that's in my trading account. I could see myself staying as about as risk seeking as I currently am. However, vice versa, right? If I'm in 10 years, I'm not as wealthy as I'd like to be, or market gets tough and I haven't been able to progress as much as I want, then naturally it's like, I don't but ratio-wise, I won't have as much per se, maybe outside of the general risk of the account in general, to where again, like you said, back to the 20, 30, 40-year-old example, like if I'm 40 with kids and have all these bills to pay, I can't be affording to lose, next year's worth of expenses over some trade. So yeah.
Going back to each of your individual trading strategies, I remember from our previous conversation that you've now, Huddie, you've now kind of transitioned to be a lot more systematic. Like you turned your strategy into a very disciplined, systematic approach in which something tells you to enter, then you do, but before then you don't do anything. Would you say you're more discretionary in comparison to Huddie? Like with your approach to trading?
Yeah, totally. However, would you agree? I'm probably, I wouldn't say the most, but I'm in an extreme where I am probably the most discretionarily systematic you can get.
What does that mean?
So if being systematic means you have to fit within this box and you can't go out of this box, like you have to take entry here, you have to risk here, you have to follow the system, I am always bouncing around in that box.
So you're still in the box.
Yeah, like if the systematic is always want to hit the bullseye every time, like they want to, this is the box and there's the bullseye, and systematic is like bullseye, bullseye, bullseye. Whether you're right or wrong, it doesn't mean you're making every trade. You could be losing trades, but you're following that system exactly. I am in the box, but I am playing ping pong with myself. Where it's like I still have the edge still works. I'm still within the constraints of making money long term, but I'm doing things that keep me comfortable in the trade, if that makes sense. Where I'm still capturing that edge, but I'm kind of adding my own flair or my own opinion to it in that moment, if that makes sense.
Do you agree with that?
I don't know how he does it.
Okay.
I don't know how he discretionarily is systematic, but he is. I know what he means, because I know how he trades. And it is true. Like he for the most part follows the rules and follows the conditions, but then sometimes he does some Kyle things that maybe he's getting in because he's got a good feeling, or he's getting out because he's got a good feeling, and he can make those minor adjustments for whatever reason. And if I did that, it would be really bad because I don't trust my discretion. Like my discretion isn't as fine-tuned as maybe Kyle's is, or can't really. Again, I don't know how he does it. So that's why I'm completely systematic. I don't allow discretionary moves because, let's say I'm worried about something squeezing, and so I'll cut early, and then it never squeezes. I won't. That's a mistake. I can never sleep with myself that night if that's happened, right? And I just got out for no reason. Whereas maybe you're able to, or maybe you're willing to maneuver in that box. I don't know. I don't know how. I don't know how it works.
But I know what Huddie means when he says if you cut thing a stock's gonna squeeze and it doesn't squeeze and you miss out on profit, I as well would be very upset. So that's where I'm systematic enough to where it's like if I set a risk level, 99.9% of the time I am waiting till that risk level is broken, because in the event I stop out beforehand thinking I'm saving money, or it looks so bad, let's get out now anyway, and it works, then I'm pissed because I took a loss that I didn't even need to take had I just stuck to the maybe the box that I set for myself that particular day, or that trade plan. So but vice versa, I will. Depending on it's the characteristics of the ticker, it's how I feel about it that day. Maybe it was I got a good night's sleep. Some days I'm just maybe have a better read and are willing to do a little extra things. Like something I do that I think always makes Huddie laugh is, let's say there is a risk level to risk off of, and we're both risking off it. Okay. I might try to be aggressive and say, hey, this risk level looks great, but there's a secondary risk level that isn't as great, but I'm still going to discretionarily trust it that it won't break as well. And it's a little bit lower. So it allows me to have more size on a short trade or a short sell trade. I will have two positions where I'll have one that risks off the highest or the best risk level, and another one that risks on my discretionarily picked level. I think this should hold. So it's I had to have two trades in one, but both are for the same position of the stock going down. And Huddie, I don't think has ever or doesn't do that. Whereas I will happily add on that little extra second flair to it.
You stretch the box a little bit.
Yeah, exactly. Yeah.
Stretches the box, and it annoys me because sometimes he'll be like, we'll both be in, we'll have a risk level, and then he'll add, and I'll be like, what are you going to risk with that? And he goes, it shouldn't go back to this level at this point. And I could never make that judgment call. How do you know that? And it's going to be choppy.
Yeah. And sometimes I'm wrong, sometimes I'm right, but I more times than not, I'll trust my discretionary choice. Yeah.
Has there been any instances in which you stretch the box a little bit too much and end up making like a mistake or regretted the decision?
Yeah, plenty. I mean, I have like a list of I think it's like 15 rules that I have, and if I break them, like that goes down in my journal. Like, hey, you broke this rule. Why'd you break it? What happened? And a lot of the times it is that situation I brought up, which is like I am emotionally exiting or entering too soon in the name of let's save some money. Like, hey, I'm already wrong. It doesn't look good. Let's just get out while we still can, only to have it actually work, and I never would have actually gotten out. Or I'm too convicted, and I'm like, hey, you know what? My stop was this level, but you know what? I am gonna move my stop higher because I think I'm right. And then all of a sudden, it's a way bigger loss than it should have been. And I'm like, damn it, Kyle, this is when you didn't stretch it. You broke the box. You broke the trade plan. You changed it mid-trade, and now you've lost more money than you should have. So definitely, I'm as much as systematic as I would like to be. The discretion keeps me human, and so there's totally mistakes that go on for sure.
Do you guys discuss ideas or like trade ideas or approach or charts?
All the time.
Yeah.
All the time,
Yeah,
every
daily.
single day? Do you basically trade the same stocks every day then?
I wouldn't say we trade plan every day, but I would say that our watch lists are very similar. And maybe if there's a big trade coming up, we'll kind of like call each other the night before and say, okay, here are the 3 different ways that I see this stock kind of going down tomorrow in the pre-market. Let's see which variation we get. And then we'll kind of workshop, potential scenarios. And then from there, we'll trade independently.
Okay.
Yeah. Our trade plan, or when the trades are going on, we do a pretty good job of never influencing each other on like how we're actually trading in that moment.
Okay.
But the preparation is also similar enough to where like we know, like if Huddie texts me, I'm like, yeah, I was already about to text you. Like we like you said, we come from the same point of view of how to view small caps or how to trade them or where maybe the real edge is. And so we're already within that confinement. And then it's just like finding those tickers that meet that criteria. And then we know we're pretty much on the same page of how it should or shouldn't go, so. Okay.
So sometimes the way that it looks as well is like I'll message him or he'll message me and he'll say, hey, have you seen this chart? And this is like, that's all I need to see. Once I see the chart, I'm like, yeah, I know exactly what he's thinking. I don't really have to ask his opinion on it. I know what we're supposed to do with this looking chart. Or the other way that it really benefits is, maybe he'll message me and I'll say, hey, Huddie, do you know about this fundamental situation here? Looks, pretty bad. You should look into it. And then immediately it's on my radar and I'm kind of thinking, okay, what should we do with this? And then, we come to the right trade things as things brew.
Do you ever have some sort of, well, that's not the right word. Do you ever, where let's say you bring him the chart and you do the fundamental analysis and then you share your analysis, or you just share the chart and that's it, and you do the rest of yourselves, filings, all that good stuff?
I think Huddie's a bit better on the fundamental side of things. I understand it enough to take advantage or profit from it if there's some kind of situation there, and there could be so many with when it comes to filings. But I think Huddie's better at digging and finding that dirt or finding that edge. And that's why, yeah, if I do bring up a chart, it's maybe like, hey, I've looked into it. I'm not exactly sure on this. Like look a little deeper for me and see if you find anything that I haven't found. And a lot of times it will. Like you'll find a certain level of dilution that's applicable in this certain scenario. And I'm like, oh, I didn't even see or know about that. So there is times where his expertise for sure I will look for in terms of if I know there's a fundamental aspect to it, but I don't know enough and I need to actually know it if I'm going to risk a decent amount of money on it. So.
Okay. Do you think there's any downside to kind of sharing ideas and trading the same tickers and kind of having a general thesis that's the same among not just the 2 of you, sometimes the 4 of you?
Mm-hmm.
There must be some type of downside. You have confirmation bias where if everyone's thinking the same thing, it's hard to admit that you're wrong. So you don't want to get, kind of caught up in that trap because at the end of the day, like you can have the best idea, the best thesis in the world, but price action is king, and that's kind of important.
Yeah. The devil's advocate, I agree with that, but the devil's advocate to that though too is that alongside what Huddie was saying, where if I bring up a chart to you and you immediately know what I'm looking at, I think that's the objective reality that both of us have conditioned ourselves to know and understand about the market, where I'm rarely worried if too many people are on one side or too many people are talking about the same idea, only because I'd like to think most ideas that I have will happen whether I'm there or not, right? So to remove myself, it's like, hey, I see this ticker that's run this way and this long and in this fashion. 9 times out of 10, it should do then this the following day, regardless whether I'm involved or not, right? So that's why when I share a chart with Huddie, he also shares that same point of view, which is like, oh, regardless whether Huddie does something with it or not, it should do A, B, C, D tomorrow, right? So it's like if I'm sharing the chart with 10 people, it shouldn't change that much about it to the overall picture of what it, should and shouldn't do. So
That's true. But does it ever upset you? Let's say you trade the same ticker and then one makes more money than the other. Would it upset you? I'm just do you ever, I guess the bigger question is, do you ever get trapped in a comparison game just among friends?
To answer the first question, I'm not sure Kyle knows what that feels like.
No, I was about to say something different.
What were you going to say?
I was going to say we have all been beaten down. We have lost the comparison game too many times to care anymore when it comes to Jack Kellogg, of us all coming up together. If I make 50K, he's made 200. If Huddie's made 5K, he's made 50. Like, it's a game we will always lose when it comes to someone like him who's just a stud. So I don't really play the game anymore.
For the most part, I will always lose to Kyle and Jack Kellogg.
Okay.
And when I win, I usually, on my trade alert, I go, take that, Kyle. It's really exciting. And it's still only $1,000 more. It's nothing. But I will say that I was the first to 100K in profits.
He was.
Oh.
He was.
Out of all of us.
Mm-hmm. He was.
It was, I think earlier you mentioned you crossed 100K around the same time or something.
1 million.
You crossed 1 million around the same time.
It was, Kellogg crossed 1 million probably, 6 months?
Yeah.
Or significantly before us. Like the competition game ended around that time.
He was probably at 2 by the time we crossed.
Yeah. He was already on his second or third by the time, me, Huddie, Dom, and I think Matt Monaco even as well. We were same week or even same day.
Oh, wow.
Like all of us. And we weren't even, in terms of the comparison conversation, we weren't even comparing. I think the market was just hot, and we just all were on that same trajectory. That when I told me they crossed the mountain, I was like, "Oh, you guys did too!" Like it was it wasn't a race to the finish line. At least for me, it was like, "Holy crap, we all just crossed it at the same time."
It's very dangerous to play the comparison game, though. I think there's one aspect of it where being competitive does drive you, and there was a moment where it definitely drove me to compete with my peers and climb the leaderboards, kind of like a video game almost. But that can also be a toxic relationship with the market. So, the most important thing is probably competition with yourself. What are your PRs? What are your best days? Let's not worry about what they're doing. Let's worry about what we're doing and how we can improve those numbers.
I agree with that. Another thing that I noticed that's very different about you is you share a lot of your charts and P&Ls on Twitter. Mm-hmm. And while you both are on Kinfo and everyone can see your verified trading performance on there, Huddie, you don't share as much on Twitter. Is there a reason? What's the reason behind whether you do share or you don't share? What do you think?
I know for me, I've gotten to the habit of sharing because I wouldn't be here if I didn't share.
I see.
And put it this way, maybe I think if I had to, psychoanalyze myself, I think one of the reasons why I had my blinders on and didn't reach out to anybody in my earlier stages of trading was because I was sharing wasn't my disposition, right? People forget of maybe the online leaderboards, forget about that. Maybe just in my own personal life, if people asked me what I was doing, or my friends were asking, I wouldn't even tell them I was trading. Wouldn't even mention that I have this thing going on in the background, right? Where it wasn't until because I was on that leaderboard and because I was sharing enough to people to recognize that I was making it happen, at least in the trading community, then that's why Huddie reached out. That's why Kellogg. Then I started talking to them. Then we meet at conferences. It made me realize had I never shared, I wouldn't be anywhere near close to where I am. Even to the point now, to the full circle, to be even being on the podcast, right the second, right? It's like I took a full 180 from almost never sharing to almost always sharing, because you never know just who you connect with for that reason.
True.
So that's why now it's just a habit. I'll just I'm on Twitter. It's where most of the trading community is. It's like let's share something today.
Here comes that intersection again where we both started and then we both ended somewhere opposite. I started recording my trades and creating video lessons, and I posted them just to like my wall, not because I was trying to prove to anyone anything. I wanted game footage. I wanted to be able to relive trades. I wanted to be able to relive charts. I wanted to, if I was in a rut, I wanted to watch my own lessons to myself. So it was more of like an active live journal for myself. And so I originally started posting that on my Twitter, and it got like a lot of feedback, a lot of what do they call it when people interactions.
Yes.
And so that kind of inspired me to keep doing it. But at the same time, I eventually hit a point where I was very confident in my trading, confident in my setups, and I just lost the motivation to keep my own diary or journal in that type of manner. So that's why you don't see me posting, charts anymore. But if you go back to like the beginning days of my Twitter, the first 3 years are all charts with entries and exits and markups, and it's still there. But again, that was more for me than anyone else, and people did find value in it, which was cool.
He does have a YouTube channel with YouTube videos still on it. I don't know how.
Really?
4, 5, 6 years ago. Yeah.
I gotta go find it. Yeah, I didn't know you had a YouTube channel.
Yeah, it's not a great channel, but there are 4 or 5 videos of me live trading on it. Yeah.
For this year specifically, do you guys have any memorable big trades and big losses? We can start with the big wins.
Why are you looking at me, honey?
Well, up to you, whichever you want to start.
Well,
if
I can
you're
go.
comfortable to share.
Mine are probably shorter because, I hate to say this because it sounds so cocky, but I really don't have big losses from this year. One of the things I'm most proud about is I've amongst the strategy that I've been able to build, the losses are really contained.
Okay.
And I don't have necessarily too many excessive losses. There's one this year, but it wasn't even that excessive. So the 2 best gains from this year, the 2 favorite that I remember very well was Fannie Mae, FNMA. Maybe people know about that stock. It's a OTC stock. It's kind of like the Clover namesake or our namesake. It's been a ticker that we've actively traded for. We haven't been trading it for 9 years, but there are random moments throughout our career where Fannie Mae is a really good trader. It breaks out well, it extends well, it reverts back to the mean well, and it has a lot of just great price action to take advantage of movements. It's even moving right now because of this whole presidential election thing. So Fannie Mae had a really nice breakout back in March, and that was probably one of like my 5 long trades for the year, maybe not many, right? Probably more than 5. But I remember that one, did really well, had a good amount of patience on it, and pretty much rode it from breakout to top. And that felt good. It was reminiscent. It was an OTC stock. We loved it. And then the other one was SMCI, which was a microchip stock that had run from 300 to 1,000.
Yeah.
And I had this crazy idea the night before that I'm going to buy puts on it because I thought a first red day was coming into this like big $1,000 level. So I had this like whole like idea the night before that I was going to, buy puts. I think it's going to drop $100, just like a mean reversion type of trade. And I ended up making like 500% on those puts. What was really cool is they went up 10,000% by the end of the day. So if I had just held, I could have retired. One of those situations. But I was just happy to have, maybe thought outside of the box and put myself in a position to have quite honestly retired that day had I just been knocked out with a bat and woke up at the end of the day. Maybe not looked at how much I was up within 10 minutes. But it was my first options trade, and it was a really successful one. And I want to hang my hat on that.
SMCI for me as well. That day, I didn't buy the puts, but I did just short the stock outright and made like 70-something thousand. But just recently, I have had a bigger trade on DXYZ.
Okay.
It was last Thursday. I covered it for $120,000. $1,000 gain. So that was I think it's my biggest gain on the year. But loss-wise was FFIE in May. I lost just under $400,000, which is like blows any loss I have prior to that out of the water because I broke practically every rule in the book. Back to that, the human outside the box breaking, like discretion changes and decisions like that just broke all of them. And I've made hard rules now or not even rules, like outside of my control rules to prevent that now, which is what I needed. But yeah, other than those two huge events, I've done pretty well with avoiding some of the bigger outlier moves. Because like, for example, 2023, I took like 8 trades that were above my max loss. Like if say I wanted to lose 50K, I lost way more than that. Or I lost at that, which I shouldn't even be willing to risk that much in the first place. That was like a end all be all. And so besides that FFIE loss, I think most of this year has been really solid in keeping the volatility low until it's time to really push it. You know, the exponential bet sizing, the A+ trades that come around is when I really like to push it, which DXYZ was one. That's why, I made as much as I made. So
what's the FFIE trade, the intentional risk? Was it 50K?
Yeah, it was around 40. And I remember my risk level being there. I remember having a risk level. But then when it got there, it was the first time for me where my conviction and arguably stubborn, then turned into stubbornness, outweighed my discipline. Right, I had a very good history of being disciplined, and like I said, all of 2023, it happened about 8 or so times where my 50K is my max stop. If I see that number on my screen, I will exit myself, and I did that over and over and over again. So like in my brain, I had this worldview of like I am disciplined enough to take that loss, and then comes along FFIE, and I'm facing that loss right in front of me, and my conviction of where I think that stock will eventually be, even though the timing is not now, just pretty much locked, metaphorically, it didn't actually, but like literally locked me in just deer to headlights. I would not cut. And so that was, the roller coaster ride for the rest of the day of me just losing, not 40K, but almost 400, 10x what it should have been or shouldn't have been. And so that's when I realized, like, no matter how disciplined I think I am, my weakness in that instance is like, if I'm convicted enough and I ignore the timing well enough, like I'll just go for a ride. So now I actually have a max broker stop to be like, hey, if you cross said number, like we're just going to stop you out for you, which is what I needed in the first place. So
you don't do, I know, Huddie, you have like live market order stop at your predetermined risk area. Do you think that would be something you consider moving forward after that big loss?
Yeah, and then I will put in stop orders if I'm saying can't watch the stock right away. Like if I have to leave for a certain amount of time, I will 100% put a stop in. It's definitely a good idea for if I'm risking that much to have a stop in general. But I also think it was habitual for me just to not have it in, and again, thinking I had the discipline to click the button myself. And now that I don't, yeah, it's a good point. Before I even hit my max broker stop of like the broker taking me out myself, yeah, I totally could implement in the future of just, hey, the trade's on, put the stop loss in and let it do it for you when it comes time to make sure you don't even get to the max broker stop in general. Totally. So
I have 2 things to say on this. One, I think the problem or not the problem, but the fear that kind of comes in when you're taking the FFIE size loss that you're taking, where you have a risk amount, you have a risk level, and then it gets there, and then why does the trader not take it? And it's basically this overarching, correct me if I'm wrong, this fear of like, if I hit this loss, it's going to drop immediately. Like if I take it up here, I know where the stock is going, and you don't know necessarily when. At this moment, it doesn't look now, but it could be later. And if you take it right here, it's going to be very hard to get back in later. So it's like everything in your body's like, hey, don't push the button right here, and then it gets way worse.
That was one of them for sure. I remember saying if I stop out now and it fails later, I don't want to get back in.
Yeah, I'm be pissed.
It's so silly how our brain works, because I could have, if I had known the alternative was a 400K loss, 100% I would take a 40K loss and then be willing to risk another 40 to potentially lose 80 instead of 4x that at 400. So it's just funny how our brains work like that. But yeah.
And then the second thing I wanted to say is the main reason that I use active live stop loss orders is because I have a tendency to click prematurely. Let's say I'm in some type of low float and it's spiking erratically towards my risk level. I might stop out 5 cents before because I think it's just going to go there. And I honestly think I'm hitting my risk level, but then it stops 5 seconds before my risk level and drops. And like that is not okay. Like it really needs to violate a condition in order for me to be proven wrong. So I use stop loss on the exit, I also use it on the entry from time to time because I think it's going to break this key level. I think it's about to break this key level, and I'll get in 2 or 3 pennies early, and that's exactly where they catch it and rip it. And it's never actually violated or achieved the condition for me to get in. So in order for me to make sure that this is absolutely in the territory of where I have to be in already, I use stop loss orders or out. I use stop loss orders to get in and out because I don't trust myself to time it correctly in the moment when it's kind of chaotic. So that's a lot of the reason why I use them.
I think I'm sure there's no right or wrong answer to how to manage your stops or whether to be whether to be discretionary or systematic. I think you both present very viable options for our viewers to think about what works best for them. Broker stops, live market order stops, or being disciplined enough to click the button and stop out.
Yeah.
But that's probably the toughest one. Okay. So you guys all met each other when you were already profitable. Is there a reason that when you were unprofitable, you didn't do as much? Well, I'll let you guys speak. You didn't do as much reaching out, or you didn't meet each other, or make as many friends online in the trading communities?
I can't speak for Huddie. I'm sure Huddie was more social than I was. I had a very, I wouldn't say unconventional, but I was very antisocial online for a long time, and I don't really have a rhyme or reason for it. I just remember finding profitability with really having not talked to or reached out to almost anyone online. It was very odd where I was just studying, I was in my corner doing my thing, and it wasn't until Jack Kellogg reached out to me online that I actually then kind of entered this realm of who Huddie's referring to, people who maybe were on the leaderboard, so to speak, or actually finding progress. And I think I was already up 20, 30K at that point. Okay. I had been to in-person conferences and maybe talked to people in person, but in terms of maybe meeting those people on the leaderboard or really networking in that sense, I really had dropped the ball in terms of reaching out to anybody. I was just kind of in my little corner, blinders on, just kind of doing my thing. So
I would say one of the benefits of being transparent is game recognizes game. So what I mean by that is like one of the first people that, first of all, most traders who are successful are generally willing to offer help. Yeah. I find that the whole community, doesn't matter what level of trader you are, like they like to talk about trades. They remember what it's like through the bad part of it all, and they don't want to see anyone suffer. They don't want to see anyone lose all their money. They want to offer as much guidance as they possibly can, given circumstances, right? So that's number one. When I was going through my career, one of the first guys that I really networked with was a guy named Tim Grattani. I went to an in-person event, and I had watched his DVD, and I saw him sitting there, and I sat right next to him, and I said, "Is this seat taken?" And he said, "No." And I was able to watch him trade the whole day and really learn a lot from him. So that was huge to my career. And at that point, maybe I was up 100K, maybe it was 80. So I wasn't any kind of real profitable or big trader, but I was finding my groove, and he kind of acknowledged the way that I was speaking to him about his setups that I knew what I was doing. I understood the game. And then what happened right after that was Jack Kellogg. Jack Kellogg is a networker too. He messaged me on Profitly on a website and said, "Hey man, can I get your number? Like I like the things you're trading." And so I gave him my number, and then we started talking. And Jack Kellogg had 20K to his name at that moment. And I had 80, and
yeah.
What did Jack also do? Jack also messaged Dom, when they were at 30, 10, 20K in profits. And he said, "Hey, can I move to Michigan, and can we trade out of the same office?" And then they got together. So I don't think that, back to the original point, I don't think that anyone was extremely profitable at this moment, but I think that we saw certain people that were consistent, that were finding success, and we said to each other, how do we branch off of each other? How can we help each other progress? Because we're not where we want to be, but we both are on, or all of us were on the right path towards something.
Yeah. Do you think had, let's say, one of you being at 1 million already and the rest of you were still at 20K, do you think the relationship would have been the same?
Probably, yeah. For you and Grattani, Grattani was a millionaire by the time you met him.
Yeah.
True, yeah.
So that relationship would have stayed the same, but I probably not. I think I mean, part of our relationship is the fact that we were all growing together. We were all
Yeah.
learning as it came. We were adapting. We were shifting. We were taking on different challenges, side quests throughout our careers. And I think that's what really cemented the bond to the fact that we're all still friends, it's been like 6-7 years at this point. Like these are lifelong friends. And a lot of that was, let's say like I stayed at 20K and they all got to $1 million. That pretty much means that I quit trading. And if I quit that one thing that we had in common, that thing that propelled us forward and strengthened our likeness, we probably would have lost contact, over the years. Not that we as people are any different, but it's just the commonality would have been dropped.
Yeah, I see. Yeah, so for you, do you wish you met these people earlier then, in that case?
I guess probably, I'm sure I maybe something would have sped up. But at the same time, when I look back at it, there's nothing I necessarily felt like I did wrong either. It just, however my journey played out, I think it worked out pretty good.
You needed the focus.
Yeah. It was just me, school, job, and trading. That was it for the first year or 2 years. Yeah, that's all I really did. So.
Yeah, I think that does kind of to add on top of the networking aspect we talked about. I think I've never met any profitable trader who's negative or talk down on any, I guess, traders who are struggling or traders who are not making as much money. I think in general, the trading community is extremely positive and willing to help, right? Would you say that's the case?
Yeah, I would. Because I think every profitable trader knows that there are really only a few poor mistakes or decisions. Like the margin of error for trading is so thin that to be profitable is already such an amazing thing in itself. So even if someone's slightly unprofitable or like right on the cusp where they're dealing with something, it's likely that the unprofitable trader has also dealt or is still dealing with that thing, to where, you can't. I don't look at an unprofitable trader and say like, wow, we are so vastly different. There's only a few, in my opinion, a few millimeter shifts that people can make. They're difficult things to change. Like, don't get me wrong, but if someone can make those millimeter shifts, like they can go from someone who's unprofitable to profitable. And I say that because I've been there. My first 12 months were of me losing. I was that unprofitable trader. And I think most, I would argue most profitable traders feel that. And so, you kind of see yourself in every trader that is trying to make it happen for themselves. So,
do you think trading is a zero-sum game?
Like my loss is someone's win and someone's win is my loss. I mean, technically there's another side to the trade. Mm-hmm. Does it mean that they're necessarily losing?
I think about this a lot. My disposition is that it's not a zero-sum game, that like markets can offer some massive wins for a lot of people, and it kind of can grow upon itself. But I do know what you mean, honey. Like I then go down the rabbit hole of like, okay, well, someone's on the other end.
Yeah.
And it might not be a perfect one-to-one. It's not like a poker table where if someone bets this many chips, I'm taking it from them. Like someone could give some back, make some back. And there's thousands of traders in any one stock that's liquid any one day. So there's no way to actually identify whose money you're maybe taking, so to speak, in this example. But it's like if we've made millions,
does that mean someone's lost millions?
Yeah,
maybe not one person.
Yeah, you don't hear the story of.
Yeah,
I don't know. I can't wrap my head around it.
Maybe I don't understand the definition of zero-sum game, but let's say that I'm buying a share, right? And I buy that share from someone else. So they sold it to me or they shorted.
Yeah.
Well, can't we both be right? Let's say they shorted and I'm buying their share. Like with different time values of how long we want to be in the stock, like I can make money and so can that person. If we're talking about the same transaction of, the person's share that I bought from, if they're short and I'm longing, if it spikes 5%, I make my money. And if it drops 10% and that person didn't stop out, they make their money. So it's hard to say that it's a perfect zero-sum game because my win is not that person's loss.
I think that's very true for, let's say, like the mega caps, the larger cap stocks. But when it comes to small caps, do you think anyone's actually investing in these small cap stocks?
Oh, yeah.
Unfortunately, yes.
Really?
Yeah.
You can see it on the Reddit boards. The crowd mentality, the Wall Street bets. I mean, yeah, people are losing on GameStop's not really a a small cap, and AMC is not really a small cap, but you can imagine, for the 2.5 years that they were fading, that Wall Street Bets was chasing, those higher. A lot of those people lost a lot of money, and a lot of short sellers made a lot of money. I'd imagine that's just a good case example of the whole dynamic on absolute euphoric circumstances. But yeah, we there's other small caps that you can see on Wall Street Bets, like FFIE. It's a great example.
Oh yeah, we had fun looking at the message boards for FFIE for a while, because it's just the comments were painful in the sense of like they just didn't know what they owned, and they thought they owned something much better than it actually was, And so these people were invested. They're like, I'm owning this thing because I think it's going to go up long term, and they're right to that opinion. But like objectively, it wasn't what they thought they owned. It just isn't. And now it's down 99% since most of those people have bought, because it just was a fundamentally flawed company, and that's like that's 90% of small cap, right? So I don't know who, but there's definitely a good portion, and unfortunately a good portion of people who just get sucked in on the idea of that they're going to catch the next Tesla, the next Apple, the next Amazon, which I would argue that would be my defense case for why trading or investing isn't a zero-sum game. Because when you think about like the big success stories like Apple going from the bottom of the dot-com bust to what it is now, it's like, did short sellers have to lose that much to have the people who are long for 20 years make the hundreds of millions of appreciation in asset? Like the company of itself got such bigger in market cap that like there's no one who could have lost that value for them to gain that value, in that sense, at least in trading. Like obviously everyone bought an iPhone, so their money went to Apple, like clearly, but that's not a lot. Like we bought it for a service and we gained that service, that product. So in that sense, like the big long-term winners, it's absolutely a zero or not a zero-sum game. It's a massive win for all long-term people.
I'm on the side that trading is a zero-sum game, but I think it is anyways.
Yeah, I mean, I don't blame you. I totally see why it can be or is. Yeah, totally.
So I know you guys, besides trading, you guys also started a business together. Was it this year, last year, sometime this year? Whose idea was it to start Clover Trading?
That was Huddie's.
I hate to take all the credit. I think there was a combined effort amongst many mutual friends. But yeah, there was essentially 4 or 5 of us that were all kind of teaching but separate, and we were all really good friends. We all trade relatively the same things, but maybe have different stylistic approaches, as we've been discussing here today. And one day it just dawned on me, like I like hanging out with these guys. Like we've done in-person events together in the past where the camaraderie is really nice. Everyone gets along. The people themselves have a really good time being with us. So I said, guys, why are we separate and teaching the same things in separate places and making people have to pay for multiple different rooms to get pretty much the same product? Why don't we just combine everything and mainly enjoy the process of building a business and running a chat room and creating a community in a place that is similar to the place that we had when we grew up as traders? And who better to do it with than those traders themselves?
Yeah, I can agree with that. That's exactly how it went. I remember the boot camp that we all were speaking at, and honestly, it was as COVID was allowing things to open up. So we hadn't really seen each other in person for probably at least a year, if not longer. And so when we all saw each other, it kind of, we were always talking online, but I think it reunited what we already were having prior or pre-COVID, along with the teaching, and then all of us being, another year or two more experienced and all being millionaires, right? Because we all became millionaires during that COVID window. To where, I think, and then, Huddie had that brilliant idea, and I was like, you're absolutely right. And then now here we are.
So it's you two and 2 others, right?
Dom and Jack. Yeah, Jack's more of a retired approach where he just kind of comes in when he wants. But me, Huddie, and Dom are the ones that have responsibility of we will be doing the webinars. We show up in the chat room every day and answer questions and all those kind of things. Yeah. So.
Do you think once you started trading education in general, once you start having the responsibility of teaching others, how has that negatively or positively affected your trading?
I think in a positive way, it almost makes sure part of my French, that you're yourself not full of shit, right? Like it's very easy to have a trade plan, but it's not the best one, or you can get away with breaking a rule here or there, and if you do, it's okay because you get away with the most, like the human degenerative little mistakes that they get away with most of the times, but don't. And when you have someone who's maybe a very new trader, very vulnerable and listening to anything you could practically tell them because they're just there to absorb good information, I immediately have to tell myself, like, hey, no, you need to follow the rules, because if you don't follow the rules, how is that person going to look at you as a role model and be like, yo, he doesn't stop out. Why should I stop out? And the next thing you know, a trader who could be an incredible trader isn't, because he lost all his chips blowing up in a stock because someone he tried to follow along, or which he shouldn't have done in the first place, but like just general good principles. If I don't know, I don't want to go off topic, but like if Greg Popovich, an NBA superstar of a head coach, started telling basketball players to shoot like this, like you wouldn't have had Tony Parker, you wouldn't have had Tim Duncan, like you wouldn't have had Ginobili, like Ginobili. Yeah, it's like you want to be the role model of the teacher. Of the trader that you want to be, which is someone who actually follows the rules and trades well. So, that's a positive that I've found.
Okay.
So.
I think the positive for me is that it reinforces good habits. And oftentimes, like I even remember like being in college and like teaching, like being in like study rooms, and what would you do? You would teach your colleagues, whatever lesson or whatever problem that we were working on, you would kind of, and when you teach it, not only do you reinforce it more in your brain, but then you also conform to it. And oftentimes, like the squirrel brain can take over, and you can do weird stuff in the market. I mean, especially in the beginning. So I think teaching just in general does reinforce good habits and does make you accountable, which is, I think Kyle alluded to a little bit. The bad part, or the negative that I would probably that I would say is, I think it does affect your trading. I think having to actively manage a chat room, alert in the chat room, it does. It's just another decision. It's another mind palace it's like a concept within your mind that it does kind of leak into your trading and can affect trade plans, covering decisions, etc. So I do think like starting a service, it does affect trading. I don't know how to put it. I think it's taken a lot of time for me to let it not affect.
Yeah. There's been times where I maybe have missed trades because I'm too busy answering a question or doing something, which is fine, but it does happen. Or like sometimes when we do live trading webinars for subscribers, I'll actually tell everyone like, hey, ask questions all you want, but I will not be reading the chat room for the next 15 minutes. Like I'm going to focus here. The dust will settle, the focus will fade away, and then we can get to whatever we need to get to. But like for the next 5, 10, 15 minutes, we're going to watch what I'm watching right now. So to avoid that kind of energy or expenditure, multiple decisions to make you screw up, like all those things where we're traders first, teachers second, and so the moment that changes, then it's a downhill spiral for both us and then for the student. So
So I know you guys are both on Kinfo, a third-party verification platform and journaling service, and anyone can go there and see your profit and loss and your P&Ls. How would you answer someone if they ask you, why are you sharing your edge when, are you scared that by sharing your edge, your strategies will eventually disappear? Mm-hmm. Or like, the win rates or the edge will eventually disappear?
I don't think I've ever really worried about that. I think there was a moment where, especially in the OTCs, there might be like, I think the one real downfall is like a limited amount of shares to locate if you're a short seller. Whereas like if you're teaching everyone about a strategy that doesn't have an infinite supply of shares to short, then you might be the one without the shares to short when it comes time because everyone else is taking them off the locate monitor. I think that was a real concern for me at one point, but that's not really edge erosion necessarily. A lot of the things that we trade have been patterns for decades. It involves tons of liquidity, and there's tons of players already in it, and it's not necessarily, at least the daily chart patterns aren't really anything groundbreaking. They're quite well spoken about and can be Googled and researched, right? So I don't think that we're saying anything that is like going to tip the scale one way or another, whether the pattern works or not. So I've never personally been worried about edge erosion. I mean, I don't think it exists in what we trade.
Yeah. I was going to add there of like back to what I was saying about trying to be objective about what the market's going to do regardless whether I'm there or not. That's also how I like to teach. Like I want to show people examples of like regardless whether me and 500 other people participate in this trade, this is likely most times, not all times, not absolutes, but most of the time will play out like this. And so when you put yourself in those kind of situations and you put them in situations where there's so much volume where you could add another few hundred million or a few dozen million and it's not going to make a difference to the actual, liquidity of the trade, that's where, the trade's going to happen whether me and everyone in Clover is involved or not. So where, yes, there is setups and edges that we've seen over time go away, but I don't think if I didn't share them, they'd last any longer, right? The market's going to do what the market's going to do, and I don't have, I'm just one of, the millions of traders that trade. Like I don't have a big enough influence to literally change an edge, and I only am here because other people have been willing to share their edge, and now I teach and share the same exact edge. It's just kind of a pass on of human psychology and market opportunity that edges do come and go, but the big ones that I think we really have our foundation on happened in stocks we don't even trade. Like they'll happen in some large cap and be like, oh yeah, look at that. It's the same kind of psychology playing out for our very eyes, but we didn't even touch it because we typically stay with the small caps. So that's kind of what we like to gravitate towards because we have that bit of confidence that edge will be there for quite a long time.
What about the secondary question in which they ask you, if you're making so much money from trading, then why do you charge for such a service or education?
I think it's a funny, and I actually learned this as I became a teacher, and it sucks to say this, most people, not all, don't value things when it's free.
It's true.
Right? You give something away for free, you give a gym membership away for free, people won't go to the gym, and I don't say that's the only reason why we charge. We charge because it's our time. Yes. For example, to that question, right, we make millions. I don't think people realize how much time we spend outside of trading to make sure the business works and to provide education for the people who want to learn. Like, genuinely honestly, if I didn't teach, I'd have much more free time on my hands. So like just from a general paying me for my time is just the basis cost, because if I wanted to do it for free or people didn't care, then I'll go take an extra 3, 4, 5 vacations a year. Like I can, but I don't. That's where my brain goes. And I do it because I'm passionate about teaching. Yeah. Right? If I didn't, genuinely, people who don't know how maybe the back ends of a service work, like you genuinely have to be passionate because if you're not, it's just a lot more work than trading already is. So, yeah.
The one rebuttal that I always kind of come to this question with is like the masterclass series where you have, a guy like Steph Curry who's, won championship level rings in the NBA and has done amazing accomplishments. He's a very successful basketball player. Yet he comes out with a masterclass on how to shoot a free throw. He doesn't need any more money, but why does he charge for it? Why isn't it just on YouTube? Why is it on masterclass, right? Because he put a lot of time and effort into that. And I think that we're not Steph Curry's, but we're guys that have made it really far in the trading journey and in the career, and we want to give back. And this is, the best way we know how to do that. And it's also, again, like kind of what Kyle was saying, which everything he said is absolutely correct. Like it is our passion. I started my whole notoriety within Twitter and the trading community by posting, my thoughts and my thoughts on charts and trades. So it was always kind of in me to want to teach, to want to talk about charts, to want to be with people and social. But I don't want to do it all for nothing, and it does take a lot of time. And but this is like my passion, so I want to dive into it.
Yeah.
And to add on to that, some of it, or a lot of it also is for nothing. Like in terms of our YouTube stream, and we do a lot of free stuff just because we want to be a part of a community. But there's also be a lot of stuff that is paid for. So just how it rolls. So.
Yeah. And also if people who are interested in learning trading don't learn from people who've made money from trading, who else are they going to learn from?
Yeah,
are they gonna learn from people who don't make money? Does that make sense?
Yeah.
The blind leading the blind.
Yeah. Is there anything else that you guys want to tell our viewers, or anything we haven't covered?
If Don was here, I would speak for him and say, "Be the best version of yourself you can be." That's what he always says.
Is that his line?
His line.
Okay, one day I'll have to interview him.
Yes. Yeah, please do.
Okay, where can people find you?
Clovertrading.io is our website. I think Clover Trading on Twitter. It's Clover Trading anywhere. So on YouTube, we do a stream every morning and then every Wednesday nights on our YouTube channel. So that's an easy way to find us. And then the website is, and also Instagram, clovertrading.io as well. So,
Okay. Before we sign off, what's the number one tip you have for struggling traders?
Size down. You don't need as much size as you think you do. If you're starting out, having that 1, 2, 3K account, I think is a good thing, because I think whether you have 3K in your account or 30K, you can learn the same lessons for a tenth of the cost, right? Like if I had a 60K account, I probably would have dwindled down to 20K for the same amount of lessons, but I only had a 6K and it only lost $4,000 to get to 2K. You don't need to spend and lose thousands and thousands of dollars to maybe ingrain the same lessons. Granted, you have to make sure you learn those lessons. Some people can lose thousands and not even reflect on their own losses, right? But I think until you find some consistency, you should be less size, because that's the time to really, maintain and survive the learning curve and keep your chips in your basket. And then once you find some consistency, then you worry about making money after that and sizing up. So,
okay.
And to kind of add on to that, I would definitely say invest in your education, because the market will take the tuition if you don't have any kind of education on risk management or how to, take it from gambling to more of like a controlled environment that we live in. And understand that this is a long-term vision. This is not some get-rich-fast scheme. You're not going to show up tomorrow and instantly know what to do, and it's not going to take a week. It's probably going to take what the average time is, 2-3 years. Some people get it quicker, but if you're here, you got to be here for a career. It's not some hobby you're going to pick up and put down and then come back to later. It just doesn't really work like that.
Yeah.
Okay. Yeah. Good tips. Hopefully our viewers actually implement them. Yeah. Thank you so much, Kyle and Huddie.
Thank you, Shay.
Thank you. Appreciate it.
I'm sure you learned from today's conversation that trading is not a one-size-fits-all game. These two pro traders can have the exact same thesis and reach similar results through very different strategy executions and risk appetite. If you want to learn more about different styles of trading and strategies from other pro millionaire traders, then check out this playlist over here.